A risk management framework is vital to an enterprise. If we ask the question, why Arthur Andersen failed and was terminated as a business, it goes back to the point where the accounting firm shredded audit documents that obstructed justice. But that led from that is that the firm was under felony, and any firm that's under felony can't conduct audits, and they had to surrender their CPA license. But this event of Enron and corporate collapses in general highlighted some of the major events and actions taken in relation to internal controls. The first one is the Sarbanes-Oxley Act. This act, the main purpose of this act is to protect investors from fraudulent accounting. The second is the PCAOB, Public Company Accounting Oversight Board, that originated from the Sarbanes-Oxley Act. And the PCAOB is an oversight body that was formed to regulate auditors of public traded companies. The third is the Committee of Sponsoring Organizations, and they were vested with the responsibility of developing an internal control framework. Fourth is the Securities Exchange Commission, and they have a mandate for the effectiveness of internal controls over financial reporting using a suitable framework using the definition of internal control, and they recommended the COSO or the COSO framework that was developed by the COSO body. The key provisions of the Sarbanes-Oxley Act, which is to enhance the quality of financial reporting, created a new accounting oversight board, the PCAOB, strengthened the audit independence rules. For example, an external auditor that's auditing an entity cannot provide consulting services to that entity. Third is to increase accountability of company officers and directors. That leads to true and fair view of financial reporting. Fourth is to mandate upper management to take responsibility for company's internal control structure. Fifth is to combat white-collar crime with more severe penalties. The PCAOB auditing standard number 5 require that the management of each audited or publicly listed firm evaluate the design of entities' controls to determine whether they are adequately addressing the risk that are materially misstated in financial statements. Second is to gather and evaluate evidence about operations of its controls. Third, it also has the responsibility of aligning the nature and extent of evidence with assessment of the risk associated with those controls. Fourth, it must present a written assessment of the effectiveness of internal controls over financial reporting. Fifth is, as part of annual audit, the independent auditor must test and report on the effectiveness of company's system of internal controls. The COSO, Committee of Sponsoring Organizations framework, has 5 sponsoring organizations: the American Institute of CPAs, Institute of Management Accountants, American Accounting Association, the Institute of Internal Auditors, and Financial Executives International. On 27 June 2007, the Securities Exchange Commission issued a revised guidance that's relating to the management's implementation of the Sarbanes-Oxley Act, Section 404.15. This ruling states that the management assesses the effectiveness of internal controls over financial reporting using a suitable framework that contains the definition of internal control, and suggested the COSO framework. Let's look at a risk management framework. The Committee of Sponsoring Organization, COSO, put forward a risk management framework where it considers internal control is a process effected by the enterprise's board of directors, management, and other personnel to provide reasonable assurance regarding achieving objectives in 4 categories. The first one is the effectiveness, that is, to the degree to which an enterprise accomplishes its objectives. Second is about efficiency, that is, the ability of an enterprise to accomplish objectives with minimal waste of resources. Third is about reliability of financial reporting. And fourth is about compliance with applicable laws and regulations. There are 5 components of COSO internal framework. The first one is the control environment. Second is the risk assessment. Third relates to control activities. Fourth, about information and communication. Fifth, about monitoring. So let's now look at the COSO framework, these interrelated 5 components. The control environment. It's influencing the control consciousness of its people. Second is the risk assessment. It's about identifying and analyzing relevant risk to achieve enterprise's objective and form a basis for determining how risk should be managed. Third is about control activities. It's controlling activities through policies and procedures to ensure that the management directives are carried out. Fourth is to inform and communicate to identify, capture, and exchange information in a form and timely framework that enables people to carry out their responsibilities. Fifth is about monitoring, a process that assesses the quality of internal control performance over time. This is a key element in the long-term success of an internal control framework. So let's look at one by one now. These components, the control environment. The control environment, enforcing the control environment through internal control, is enforcing the integrity and ethical values, commit to competence, use the board of directors and audit committees to oversee the policies and procedures, support management's philosophy and operating style, create an appropriate organizational structure, assign authority and responsibility accordingly, use human resources policies and procedures that are consistent with organizational objective. Second is about managing risk, assessing risk. First is to create company-wide objectives of risk assessment. Second is to create process-level objectives of risk assessment. Third is to identify and analyze risk. And fourth is to manage change in relation to risk assessment. The third component is about control activities. In controlling risk, the enterprise must follow policies and procedures that are enacted in that enterprise and keep improving security in relation to application and network, conduct application change management, and plan for enterprise continuity and backups. Fourth is about information and communication. Enterprise must measure information quality, measure effective communication consistently. Fifth is about monitoring. Is to undertake ongoing monitoring and to conduct separate evaluations. Fraud and its relation to internal control. First, we must understand what is meant by fraud. Fraud is a deliberate act or untruth intended to obtain unfair or unlawful gain. Fraud always entails manipulating information for criminal purposes. It's the management responsibility to prevent fraud and other irregularities implied by laws. Internal controls and audits are not wholly sufficient to detect fraud, but a system of internal controls and an ongoing process of review can reduce that incidence. For example, installing firewall or software following security rules can regulate the traffic flow, information flow with the internet. Computer crime in the information age includes where computer is the target of the crime or means used to commit the crime. First, computer can become a tool for the crime. For example, computer can be used as a tool to make unauthorized transfers from banking information systems. Second, computer can be a target. For example, accessing data through software secretly installed in it, like malicious software and malware. So we've talked about malware, malicious software. It's a way of committing computer crime. There are 6 types of malware. First, sodomization. It is to systematically steal very small amounts from transactions through decimals. Second is backdoor, where a programmer can install a code to bypass security screens when once the program is installed or fully installed, then the programmer can bypass the firewalls. Third is the Trojan horse, is to maliciously destroy the data in the hardware. Logic bomb is the fourth, is a secret code as included in the program that activates on a certain date or when an event occurs. Fifth is the worm. It's programming code that replicates in disk, memory, and across networks. Sixth is the zombie. It's a computer programming code that takes over the computer. Then the computer that's been taken over will populate programming code onto other computers through internet connections. But the original computer is not detected. So this malware or the malicious software are a set of instructions that are passed on to other computers or the victimized computers. Computer crime represents an interesting example of process failure. It has been estimated that losses due to accidental, non-malicious acts far exceeds those caused by willful and intentional mistakes. So the enterprise should recognize that the computer must be protected by a system of internal controls that are capable of preventing crimes, but also minimizing simple, innocent errors and omissions. A framework to design an internal control system. When designing an internal control system, the system of flowcharts helps. Because the system of flowcharts show the process flows, and the process flows will enable the enterprise to identify where and what type of internal controls that should be placed to control those processes and events according to the policies and procedures of the enterprise. As a manager, we can ask the question, what are your concerns about this process? If we take, for example, order process, what are the objectives and related risk? Let's look at a scenario. The first, all the orders are entered in timely manner, but there can be orders that are lost, stolen, or delayed. So there should be internal controls to detect them. Second, all orders are correctly recorded, but the enterprise might miss some orders or record orders that was not received from the customer or record amounts incorrectly. Internal controls should be in place to assure that these processes are conducted appropriately. Third, all the inventory changes are recorded correctly and it's recorded for the correct item and amount. And internal controls can help. Fourth, accomplish all these activities, the processes, activities cumulatively gives rise to processes. And these processes are accomplished with minimum of resources, such as in relation to ordering, optimizing the sales representatives' time and resources, ordering to clerks' resources, and the computer resources. The purpose of internal control is to provide reasonable assurance of achieving objectives in three categories. First is the operation process control. In relation to operations, enterprise needs to ensure they are efficient and effective. Second is the information process control to ensure there's reliable reporting. Third is the compliance process controls to ensure that the enterprise adheres to the laws and regulations.